the Zoom business model, and how does Zoom make money. Wishing a very favorable good afternoon, and today we are going to talk about Zoom business model. We will see how it makes money in this digital world. This is going to be a very good case study. So before we start, subscribe and hit the notification bell for more such videos and updates. Okay, Zoom is a cloud-based conferencing tool that allows users to virtually interact with each other through audio, video, and chat. The company's competitive advantage is centered around the product ease of use as well as high quality of audio and video output. Zoom makes money via subscription fees, hardware sales, advertising, as well as by investing into other startups. It operates on a freemium business model. Founded in 2011 by a former Cisco executive, Zoom became an instant success due to its product superiority. This reached the peak in the company's IPO in the 2019. At present, Zoom is currently valued at $47 billion. So what is Zoom? Zoom is a cloud-based software application that allows private individuals as well as businesses to virtually interact with each other. Communication can occur via text, audio, video, or a combination of the three. Users can hold on one-to-one meetings or conduct video conferences with up to 500 participants. Screen sharing allows meeting participants to better coordinate within meetings and distribute information. The worldwide adoption of Zoom is powered by its two core products, that is, Zoom meetings and chat, as well as Zoom rooms and workspaces. Zoom meetings can be attended and held via a web browser or a desktop and mobile application. The chat works as an extension to the meeting product where users can interact through a chat with each other, share files, or create groups. Rooms and workspaces, on the other hand, allows businesses to utilize hardware such as computer, tablet, camera, microphone, and more to hold virtual meetings. The product is specifically aimed at the larger scale organizations which need to hold meetings across different offices. To make integration with the hardware easier, Zoom even offers its own set of hardware that they develop in collaboration with other manufacturers. Other products the company has developed are: the first one is Zoom Phone, that is a cloud phone system that comes with features such as intelligent call routing, automated attendance, voicemails, dialing personas, call recording, and many more. The second one is Zoom Video Webinars. It is a conferencing tool that allows businesses to easily conduct large online events with audio, video, and screen sharing. An app marketplace where existing customers can install third-party applications such as HubSpot, Slack, or Trello to enhance the functionality of the product experience. Zoom applications and hardware products are available across the globe. The company counts worldwide renowned businesses such as customers including Uber, Rakuten, TransferWise, and many more. Apart from visiting its website or downloading its desktop or browser clients, Zoom can also be accessed on Android and iOS phones, as well as on tablets. So let's dive onto a short history of the Zoom. Zoom was founded in 2011 by Eric Yuan, a former executive at the video and web conferencing company at Cisco WebEx. Prior to starting Zoom, Yuan spent 14 years leading various engineering teams, that is first at WebEx, then at Cisco after his acquisition of WebEx in 2007. He joined WebEx as one of the company's first software engineers in the 1997 after his ninth visa application finally got approved. At Cisco, he often saw how frustrated the company's customers were with their inability to listen to the demands and the slow product iteration process. For instance, every time a user logged into a WebEx conference, the company's systems would have to classify which version of the product to execute, which slowed things down tremendously. If too many people were on the line, the connection was severely strained, which led to the bad audio and video quality. Plus, the application lacked features such as screen sharing for mobile phones. So, in 2011, Yuan decided to pack his bags and venture out on his own, making sure to take a team of 40 Cisco engineers with him in the process. Initially, the company started out as a SASP but rebranded to Zoom soon after. In the early days, Zoom faced the problem of attracting investors since nobody believed that the existing giants such as Skype, Hangouts, and WebEx could be dethroned. Luckily, Yuan's network, which included former WebEx CEO as well as his deep technological experience, provided him with the necessary credibility to raise $3 million for Zoom's seed round. 2 years later, in 2013, Zoom finally launched its first product while announcing a $6 million series A round. The quality of the product stood out immediately and allowed the small software startup to become one of the leaders in the video conference industry. Video conferences could be held on all hardware platforms, that is desktop, mobile, tablet, with the ability to host 40 people at the same time. Because the Zoom pricing was significantly cheaper, customers were flooding in right from the get-go. Soon after its launch, the company amassed a customer base of over 1,000 businesses, which hosted a total of 140,000 meetings. By May 2013, Zoom crossed the magic mark of 1 million participants. Over the years, Zoom quietly added more and more features as well as the customers to its platform. The continued success peaked in the company's IPO in April 2019. At the time, Zoom surprised many investors due to the fact it already operated on a profit. This stood in stark contrast to its tech counterparts, including Uber, Lyft, or Pinterest, which continually to burn money at excessive rates. In 2020, as a result of coronavirus pandemic, Zoom rose to worldwide prominence as well many companies began to use it to conduct meetings and organize their work processes. With its rise to the worldwide fame, the company received some backlash for its handling of its security matters. There were several reported instances of unintended people joining existing meetings, a term referred to known as Zoom bombing. Multiple corporate entities, including the US or Germany, advised its administrative workers to avoid using Zoom. Furthermore, more than 5 lakh Zoom accounts were supposed being sold on the hacker forums. The company responded to these events by upping up its security features, as well as acquiring messaging platform Keybase. Despite this, the company has been on an absolute tear, seeing its stock value almost triple. Additionally, the company added a variety of features such as the ability to suspend participant activities as well as reporting unwelcome users in November 2020. In order to accelerate the adoption of its products, Zoom also introduced its own app marketplace as well as began investing in other startups with the launch of $100 million investment fund. To capitalize on its astronomical stock price, Zoom in July 2021 also announced it intended to acquire Five9, a maker of cloud-based customer service software, for $14.7 billion in all-stock deal. Unfortunately, the deal was called off in October as Five9 shareholders voted against the acquisition over the concerns about Zoom's slowing growth. In the meantime, in August, Zoom also reached a $85 million settlement with users who accused the company of sharing data with the third parties without the permission, thus enabling the previously mentioned Zoom bombing incidents. With more and more people returning to the office, Zoom stock, despite record sales number, also took a big plunge. Despite its recent boost, Zoom continues to be one of the world's best video conferencing tool out there. So the big question is, how does the Zoom make money? Zoom makes money via subscription fees, hardware sales, advertising, as well as by investing into other startups. The company operates on a freemium model, which means that customers can use Zoom products for free. If they intend to access more advanced features, such as being able to host up 500 participants, being able to record calls, customers will have to pay a fee. However, Zoom has also started to monetize premium users through the introduction of ads. Regardless of its monetization methods, Zoom's competitive advantage continues to be grounded in its ability to deliver a flawless product experience characterized by fast loading times, high quality audio video output, as well as its ease of use. Without further ado, let's take a closer look at each of the Zoom revenue streams in the section below. Subscription fees. The vast majority of the revenue that Zoom generates comes from charging various subscription fees in exchange for access to its suite of software products. Zoom's flagship product is its meetings platform, which enables teams and businesses to communicate online via audio, video, and text. Apart from its free basic plan, Zoom offers paid versions such as Pro, Business, and Enterprise. These products are all aimed at different set of customers, and depending on the price paid, allow them to host varying numbers of participants, obtain recording transcripts, or even host conferences in the firm's native branding. Zoom is then being able to cross-sell by offering ancillary services such as more cloud storage or premium support for an additional fee. Similarly, it also monetizes its other software products such as Zoom Rooms or Zoom Events and Webinar via monthly or yearly software licensing fees. Additionally, Zoom offers dedicated plans and products for a variety of industries, including education and healthcare. By tailoring its service to a specific customer segment, Zoom has vastly increased the possibility of selling into that customer type. On top of that, some of these customers, such as universities, are not very likely to replace Zoom due to the slow movement that comes with being an academic institution. As a result, once Zoom has managed to ingrain itself into such an organization, it is unlikely to be replaced due to the complexity being involved. This in turn allows Zoom to better forecast its future revenue, which it can then use to buy up other companies or invest into startups. Now coming to the hardware sales. Next to its software products, Zoom also offers various hardware items that enhance the experience of its software suite. More precisely, Zoom offers dozens of different telephones, tablets, speakers, whiteboards, and much more. These products are offered in cooperation with other hardware manufacturers such as D10, Yarlink, and much more. Customers then pay a monthly subscription fees for every hardware device that they source. Zoom then shares that revenue with the hardware device manufacturer that take care of the installation as well as the maintenance services. Now, coming to the advertising part, it is a stream of the revenue that are the ads Zoom shows after the meeting commences. Originally introduced in November 2021, ads are only being displayed to its free basic users who don't pay for its product. Consequently, this finally enables Zoom to also monetize the users that do not want or need to pay for its products. Just like with any other form of online advertising, Zoom is likely being compensated on per impression basis. That means whenever a user sees an advert, Zoom generates a small amount of revenue. With tens of millions of active users, this can quickly compound into a significant portion of the revenue. So what about the investments the Zoom has? As previously stated, Zoom in April 2021 unveiled a fund with which it would invest into startups that build on the top of its ecosystem. Over the course of 2021, Zoom has invested in more than 20 startups out of its $100 million strong Zoom Apps Fund. Zoom generates money from the fund whenever it is able to sell shares in the companies it invests in for a greater price than they were purchased for. Apart from making money from those investments, the goal is to actually enhance the ecosystem around its product. This allows Zoom to onboard a whole new set of customers which may originally come from the startups it funds. Additionally, the more integrations Zoom possesses, the more attractive its products generally become. To that extent, Zoom has also introduced its own app marketplace, allowing other software companies to integrate into Zoom product suite. However, Zoom does not currently monetize its app marketplace but could do so in the future, for example, by charging a listing fee or taking a percentage cut from every sale. Now, Zoom funding, valuation, and revenue. According to the Crunchbase, Zoom has raised a total of $276 million in 8 rounds of venture funding. Notable investors include the Horizon Ventures, Emergence Capital, Sequoia Capital, and many others. Zoom raised another $356.8 million in its IPO, which was announced in April 2019. At that time, the public investors valued Zoom at $9.2 billion. Its valuation has now risen to over $47 billion. For the fiscal year 2020, Zoom has recorded total revenue of $2.65 billion, up from just $623 million in the year prior. Profits surged to nearly $1 billion, up significantly from the $101.3 million it posted in 2019. Thus, this was all about the Zoom story, and if you like the video, subscribe to our channel and hit the notification bell for more videos and such updates.